And digital has become a big part of our business. So digital finance, digital lending and services, we saw that happening last year. This was set up a few years before we even anticipated COVID. It just shows that we are right on the track in terms of our business. So from our partnership with KCB and M-Pesa before, our new partnership with other players, we're doing the launch of FUMA that we're going to launch soon. So that gives you a model about the strength. We remain consistently pushing performance in terms of efficiency. This is one area we've driven much more, and our CFO will speak a bit later about that. We will achieve the best performance in terms of cost efficiency, despite having consolidated our business with NBK fully this year. And more importantly, is to remain stronger player across the region that we operate. We're a strong player in Eastern Africa, and that remains important, just to understand that what KCB stands for. We see in the next decade those will remain the key priorities for our businesses, and founding on that purpose, I think it's critical for us. But one aspect I'd like to reinforce is it was a year with difficulties. We also felt firsthand the difficulties for COVID-19. If you look at the statistics at the country level, we had many cases in addition of 533 confirmed cases. And that is up to last year in December. We continue to see challenges in this year. But I say we learn better how we operate and how we learn, changing lives, delivering our results in this digital channel today. And I would say from a loan perspective, salute the work you've done with our regulator across the regions. Maybe every single bank behaves differently, but I would say that the restructure have remained stronger. We've seen more on the consumer loans at the industry level. KCB is a bit on the behind because we run a very good scheme program for our customers, and therefore the level of structuring has not been as high. On trade, our SME customers, those who deal with areas of manufacturing and agriculture and real estate, where we have a big exposure. So overall, we will see that in last year, a number of customers and many sectors were affected, but I'm glad to say that there's optimism. This is what our chairman spoke about earlier. Last quarter, and you'll see from our results, was much stronger. We saw greater resilience in our businesses, better performance in our book. We're seeing 25% of our restructured portfolio getting back into performance. And overall, the strong increase in our mobile banking transactions, although we're not charging any fees and we're still in that regime of zero-rated fees, we see a huge opportunity. Of course, manufacturing, trade, and consumer education remains the key sectors. We see that in the next year, or this year and next year, some sectors, like hospitality, will remain much longer to recover. But I'm happy to see early signs. And if you look at our SMEs and our women enterprises that we continue to progress on, in fact, our next slide shows the progress we've seen. We've doubled our level of lending to our women entrepreneurs in a COVID environment, which is very critical for our business, showing our resilience and our commitment. Our SME loans have increased, by an additional 5 billion shillings in this period. When concerns were how do business perform, we have sustained and retained our staff and organizations. This is a very exciting story that we built as a business. We were pioneer in the credit guarantee scheme, which was launched last year. And that will continue to provide much needed liquidity for the businesses we need. And I must say that even in that period, quite glad that we were able to do an innovative partnership with the IFC and Bio and Standard Fund for a new MSME green or climate-friendly financing, including women enterprises in the year. And so it was a year that we made progress despite being in a very difficult. And that innovation is what resilience means in our businesses. And on the digital side, this is perhaps one of our most exciting journey for the last year. When we launched our VUMA platform a year ago, now we are adding more services. And this is how to disrupt and deal with payments across our network. For those who look much beyond other markets like Asia and North America, how do we bring cashless in these transactions? This platform, which is run by us directly, looks at how do we increase lending, how do we look at payment services, how do we expand our network, how do we enable people to run their transactions without carrying cash over the years. And our ambition is to create more than 1 million enterprises in this model and providing 24/7 facilities in partnership with other global players. So that will be a key plan for a non-funded income service provision for our customers. And you will see from the numbers later on that most of our transactions today are happening on the digital channel. And then in terms of our own organization last year, despite the difficulties, we still retained a very strong credit rating from Moody's. And the outlook was turned from stable to negative. That's seeing the environment that we're operating in today. But this demonstrates the strength that our chairman spoke earlier about our own organization, that we are more long-term. We continue being rewarded or recognized globally. I just mentioned a couple of them. Today, we're still the highest ranked financial institution in East and Central Africa today. We remain top 20 in the continent, but we are 667 globally. And these are 40 steps last year. We moved 40 steps up, and it's not far that the bank is running towards being top 500 banks in the world, which is a very strong recognition for the organization that we have. We have recognized as the best financial institution in terms of the safest bank, and also many other we were receiving last year. This just demonstrates that we remain strong and consistent in our delivery of our objectives. If I look at one of the most critical accreditation last year, it came in from the Green Climate Fund. This is very unique because if you remember about the challenges we see on climate adaptations, on migration of challenges for our customers, and we see that all over in our markets, whether it's in Kenya or in the region. KCB is the first bank within the region and the second bank in the continent to be accredited with this kind of program. And so you will see us investing more into green projects on energy, on agriculture, on education, and any other areas that we continue to invest. And that will be the future of perhaps contributing towards the net zero emissions levels, looking at our level as an organization. And that we will say that is one of the greatest achievements we achieved for us as an organization in the last year. If I look at the areas of evaluation of our facilities, this is something we've done over the years. And last year we did less than 100 billion worth of review towards our environmental and social and environmental assessments, and we will continue to do as we proceed in the next year. If I look at something that's very close at home for our organization, even in a difficult year, we created a number of jobs under our key project of the Tujiajiri program with the MasterCard Foundation. The jobs were much less, but I would say that still 6,000 or to 9,000 jobs created, 6,000 trainees, and these are scholarships from the organization for KCB, was something that is very positive for our organization. And now I'll turn a little bit into a macroeconomic review of our organization. So difficult year. If you look at Kenya, we came down our GDP in quarter 2 to 5.7%, and then, but there's an improvement on quarter 3. We do expect that quarter 4 will be much better for ourselves, and that's a good story. There's optimism in a difficult environment in our economy. If I look at the region, for more countries have, I would say, affected differently. Tanzania was the one that I would say was ahead of the rest, but we see more difficulties in 2021. If you look at South Sudan, where we operated, in Uganda, Burundi, and also for Rwanda, and all of them have worked differently. But what I would say overall, that even in an environment where we saw difficulties, our regional business performance has actually scaled up. We're now in closer to 15% of our total revenues and earnings have come from international businesses, so accelerating towards the 25% target which we want to achieve in the next 2 years. If I look at the regional economies, that's quite clear on the currencies. We saw that globally. I would say perhaps the Kenyan economy has remained more resilient. We had some devaluation of around 7% in our exchange rate, but overall, from a macroeconomic level and also looking at the current account deficit, we remained quite strong. And if you look at, we have some of the historically lowest current account deficits as our economy, and that's remained in our agenda. Remittances continues to grow, and that is a good show that generally the economy of Kenya is resilient during the crisis. If I look at inflation rates, these have remained this saw uniquely a very strong position on a year-on-year, and we saw a dramatic recovery in Rwanda, where we are seeing now inflation is around about the 3.9 to 4%. If I look at the next business model for ourselves, it's important to reflect on how did the markets perform, because KCB remained, the second largest active counter at the exchange. The Kenyan exchange rate did not, exchange market did perform very difficult, but overall Africa, I would say we were somewhere in the middle. So we were not necessarily the highest level of our performance, but I would say that we did perform compared on a year-on-year basis, and that we see a good chance for recovery for the share price and our performance for our stock as you go into this year and next year. I'll speak briefly about our channel performance, and then our CFO will speak more about the financial results. So 3 main areas from our results, I would say, we remained extremely digital in our transactions. So we still continue to see a decrease in our transaction at our branches, but 98% is really at the sweet spot. You are at the intersection of technology and service. Yeah, and it will continue to be. It doesn't mean that we are not having branch transactions. It just means that we are more active on mobile, agency, internet, so offline. And I will see the numbers as we progress. But this is a great story which the bank started many years ago. So when COVID came, we only accelerated. If you look at transactions at branches, they have dramatically reduced. 5 years ago, we've halved our transactions, either at the individual level and either in full level transactions. And this is a great story. It means we can use our branches for much more value-added services for our customers. We can do the SME and micro enterprises we want to be able to do. We want to support our women entrepreneurs, and that will continue to be. But those transactions are then migrating into our digital channels that we're going to be able to see. So we have achieved a significant milestone last year. We crossed 1 trillion shillings of mobile transactions, and that's a great delivery and a good commitment for our clients and the service we provide. If you look at that from this year, now our revenue dropped last year because we had to accommodate and provide lower fees. Most of the fees were actually waived because of the difficulties we faced in 2020. We believe that there's an upside. So if you look at mobile banking, we had difficulties in a lot of the loans we issued. It's a great story. We lent more than 154 billion shillings last year between KCB M-Pesa and Fuliza and mobile loans. But we see that that decline was because of the difficulties earlier in the second quarter and third quarter to address, customers' repayment abilities. Some businesses were not operating, the challenges we faced in terms of lockdowns. But I'm happy to say that we see a huge opportunity. We know how to lend in addition to 200 billion on an annual basis in these platforms. And so this year should be much more successful for ourselves. Another new area is that digital brought in more deposits, something that we see in terms of from clients, bank. Traditionally, customers come into the bank and move their money to mobile wallets, usually. But last year we saw a very unique position. In December, more than 83 billion shillings moved in from the customer's wallet to the banking transactions. We are shy of 500 billion shillings of deposits. And that's a great sign in terms of this is the behavior we want to see for our customers on a day-to-day basis, so that we now can pool resources, we can bring in our deposits, we use our platforms. So that 7 times multiplier effect we see as a huge value for us as we progress. And this is what programs like VUMA are based on in terms of the future of our organization. And then on agency banking, that naturally moved as we move transactions away from the branch. If you look at our ATMs transactions dropped last year.